I'm on a run here, guys. I just recorded one video, but I had another idea, so let's go with that. I'm just loving this coffee guru. Should get paid by those guys. Look at this. Let me show you my track record one more time. This is what happens when you trade like a casino. You see that consistent upward trend? This is the result when you trade like a casino. So what do I mean by that, trade like a casino? Because literally, if you trade like a casino, you will win in trading. You know the saying, the casino always wins. So what does that mean? Look, a casino doesn't really care if somebody wins and leaves with $5 million as a win. Because you know what they know? Is that if they let the statistics play out, they will always win. They've already made probably over 1,000x. So they don't care. Of course there are other winners in between. That's part of the statistics. Casinos do not rely on what they see. They rely on the math. And that's why they're very strict about anyone trying to fool them with math. Trading is exactly the same. It's won when the math works out, especially after multiple trades, like many trades. And that math is what I call, you guessed it right, statistical edge. I try to simplify that word more and more and more in my videos so that you just understand what I'm trying to say. So to win in trading, you simply need to trade markets like a casino and not like a gambler. The gambler loses in the casino is actually winning. Just think about it. I think the market size of the global casinos online gambling is $300-something billion. Think about that. There are tens of thousands of casinos around the world, but only a handful ever go bankrupt. And even those that went bankrupt, not a single one ever went out of business because of one single gambler. Because one gambler won too much money. Simply they didn't understand how to manage their risk. So that was bad management. It's actually very difficult to make a casino lose. But on the gambler's side, what do you see there? What do you see there? You see a bunch of idiots that would bet their entire life savings, and at the end of the day, basically all of them walk out of the casino with nothing. Absolutely nothing. So yeah, very few win a lot. And then lose it all again, by the way. That's why the big rollers get wine and dined and get all these perks. Because the more they play, the more certain it is that they will lose. So some have been already on a losing streak and they just can't get enough of the thrill. And that's also why you need to differentiate trading from gambling. You need to be a casino operator. You need to have the mindset of running a business, not a gambler. It's a super, super, super important thing to understand. When you understand that, then things change. I said it again. I love that saying, so you will hear me say it over and over again. When you change the way you look at things, the things you look at change. So how does the casino make money? Like, why does the casino win? It's very simple. It's called the house's edge, statistical edge. So the more money runs through the roulette table, the more money they will make. You have black and red on a roulette, for example. That would be a 50-50, right? But they also have a zero. In the US, they even have a double zero. And they're actually now thinking of adding a triple zero. So these zeros, that is the edge. They bring the 50-50 down to, I think, 48, 47, something like that. So it's not a 50-50 anymore. And that little difference, that's the edge for the casino. And by the way, a brokerage that you trade with also has an edge because you pay the spread on every trade. So it's already not a 50-50 anymore, right? While the broker does not pay the same spreads because they don't hedge your trades. This is a different conversation. But, so the casino wins because they have a house's edge. All they want is people to run their money through the system so that edge ends up in their pocket. And the gambler, they have lucky shots here and there. And they may win even sometimes a lot of money. But this is why also you need to understand why there's a saying, don't push your luck. Because luck is very fragile. And it's not repeatable. It's completely random. And you cannot plan with luck. And what the casino does, by the way, it does not ever change. And what the gambler does, it changes on whether he's winning or losing, whether he's stressed or euphoric, whether, whatever he's trying to do. But the casino just gets their average profit. They know when they have a certain amount of volume running through their system, they will have a certain amount of profit. The casino relies on math and their house's edge. And the gambler relies on luck and nonsense. So the casino has a system. The gambler has his gut feelings. Look, gambling, if you enjoy it as a fun thing, fine, it's your thing. Huh? I'm a trader. I have enough to do with markets. I'm not really into gambling. Actually, I'm quite happy that I have zero appeal for gambling. Zero, absolutely zero. And maybe that's also why I got naturally, quickly adapted with statistical edge type of trading. Because this is how you treat your trading like a business. And a casino treats their trading like a business. Because it is. And a casino has a complete system. They're not relying on any sorts of feelings. And in trading, you can also create a house's edge, your strategy's edge, with a statistical edge. How you build a statistical edge? By using the 7 building blocks. Very clear, very simple. I've mentioned them in other videos, and I could do an extra video also just about the 7 building blocks too. You need to understand that if you use only one building block, you will still fail. Like if you have a good risk management, let's just say, you only take trades with a 3-to-1, 2-to-1 type of risk reward. But then you enter the market always at the wrong phase or in the wrong price position, or you're not paying attention to an additional confirmation or any of these things, then you will still lose. So that's not going to make you a profitable trader. You need to have all the 7 building blocks in place. And then you have a system that is built on math with an edge, with an advantage that if you play it out over enough number of trades, will have a positive result. It has a positive built-in expectancy based on a statistical edge, just like a casino has. And you have your risk management in place. You understand when and how you do your trade management. What exactly is your entry trigger? When you want to exit, how you make your targets. All of these things. You stack the confluences in your favor. You stack the odds in your favor. And this is how you actually make it a statistically edge sound strategy. But again, it needs to really be for all the 7 building blocks. Only one will not work. If you think you have a strategy with a statistical edge that in terms of hit rate, but you don't use a fixed risk reward at the very least there, then you're also not going to win. But this is where I would start, by the way. If you have a systematic approach and you have a strategy with a statistical edge, go with a fixed risk reward. Only. Leave it there. Just trade it long times, and then you will win more than you lose. That's the consequence of math. I also keep saying that when you go to the gym and you work out every single day, your muscle will grow. Your body will change. It's not a matter of opinion. It's a consequence. And the same is with trading. If you put these blocks, the building blocks, in the right place and you act them out correctly, then you will have a positive result. So if you always take a 2-to-1 trade, risk reward, and let's just say you have a 50% hit rate, by the end of the day, you will win. But a lot of people shoot for 10-to-1, or they don't secure their trades early enough, and then they go back and lose, and then they really have their stuff all over the place. And that's why they don't work. You can go to a more dynamic risk reward once you've mastered the statistics. So once you've traded with a fixed risk reward for a while and a statistical edge strategy, then you can apply your discretionary decision making to let the trade run even further, so that you can hit more than a 2-to-1, but you secure a trade too. But that's a more advanced concept. A lot of people start there and they're hoping and shooting for 10-to-1 and whatever nonsense they read and find everywhere and think it's easy to do, because it's wrong. It doesn't work. So you don't need ridiculous risk-reward ratios either. You don't need them. They are a shiny object. They are bullshit. And you certainly won't make money with them. Just trade like a casino, guys. Have a simple edge. Doesn't need to be huge. Let it, work itself out. And the track record that I shared you, it's actually built on a 2-to-1 risk reward profile. That's the risk reward of these trades. 2,000 whatever trades, 1.7 years, over 100% profit. Just this month alone, 7% profit. Maximum drawdown, 10%, all over, and with a simple 2-to-1 risk reward. So this is how, when you have an edge over the market, your job is not to second guess your edge while you execute it. You can review your execution and your data on the weekend, after the journaling, things like that. But your job is to execute it exactly like the casino would, like a business owner. That's how you make money. That's how you win in trading. So if you have any questions about that, Any questions about statistical edge, about the whole casino approach, about the 7 building blocks, about my mentorship that I offer. And by the way, I'm really not looking to offer this to a lot of people. I only want to work with people that are serious about learning to trade professionally with statistical edge based on data, on math, work on themselves, and are happily willing also to put a little bit of effort into it, walk a little bit of an extra mile, and then gain a skill set that can make you live free and have actually that Instagram lifestyle without whether you need to flex or whatever. Like, everybody needs to make their own choices there, but that's what I want to teach people: the ability to make money in trading with a statistical edge approach. No nonsense, no magic, whatever, clearly objective. So if you have any questions about that, drop them in the comments. I'm actually interested in your questions, in your feedback. And any other topics, drop it in the comments too. Obviously, if you like what I'm doing here, I'd be very happy if you would share, like, subscribe, help me with the algorithm, grow this channel so that more people learn about these things that I'm teaching you here. And that's about it for today. So I see you on the next video. And don't forget about your coffee guru.